Hello everyone, welcome to the Financial Information channel. My name is Marvin. In this video I'm going to give you that information about taxes and the stock market. I'm going to give you that information about taxes and stocks, options and dividends. Now in my opinion, knowing the information about taxes is very important. We all have to file taxes every year. So in this video I'm going to clear some confusion and I'm gonna give you some suggestions about taxes, and at the end of the video I'm gonna give you some tips regarding the stock market and taxes, so make sure that you stay until the end. Now let's begin with the video. So the first thing that I'm going to mention is to give you that suggestion of getting the IRS free tax guide. I'm gonna leave the link in the video description so you can go and get that guide. It is updated every year, and one of the things, you don't have to buy the Tax for Dummies book. That is a waste of money. And the tax guide from the IRS is gonna explain all the tax situations in the United States. Now you have to keep in mind that this tax information might change under the new president. He will propose a new tax reform in the United States. If anything changes, I'm gonna do an update on this video. And the number one thing that you need to do first is find out your tax bracket. Now I'm gonna put on the screen the 2017 tax income bracket. It is very important that you know where you are in terms of your tax bracket. Now let's take a look at the first example. If you are single and you made less than $9,325, your tax bracket that you're going to pay for that income is gonna be 10%. For long-term capital gains and qualified dividends, it's gonna be 0%, and I'm gonna go over that information in a bit. Now in the second example, let's say that you're single and you made more than $418,400. Your tax bracket will be 39.6%, and the qualified dividend and long-term capital gain is gonna be 20%. And once you find out your tax bracket, the next step is find out what is taxable as an income. Now I'm gonna talk about capital tax. The first thing I need to know is we have long-term and short-term. And the long-term capital gain or capital losses means when you own a stock for more than 1 year. And the short-term capital gain and losses is when you own a stock less than 1 year. Now, one thing that you need to keep in mind is that when you own a stock does not mean when you buy the stock. So let me give you a quick example. Let's use the date of January 1st, 2017. So if I buy one Google share in January 1st, 2017 for the price of $950, and I sell that same share in December 31st, 2017 for $1,000, I'm gonna get $50 capital gain, and that will be considered a short-term capital gain. Now if I buy the same Google share in January 1st for the price of $950 and I sell it on January 1st, 2018 for $1,000, that will still be considered short-term capital gain. So the question that you might ask yourself is, why if I buy the stock in January 1st, 2017 and I sell it on January 1st, 2018, why is short-term capital gain or loss? And the reason is simple. You begin the holding period, the stock that you have under your account, the day after you buy the stock. So if I want to receive the treatment of long-term capital gain or loss, I need to keep that stock for 1 year and a day after you buy the stock. And in example number 3, if I buy the Google share of $950 on January 1st, 2017 and I sell it on January 2nd, 2018, that is going to be long-term capital gain or loss. Now keep in mind, if you're on the 10 or 15% tax bracket, you might qualify to pay zero tax on those long-term capital gains. And now that I have covered what is short and long-term, I'm going to cover capital losses, which is very important. And for this case, I'm going to give an example. Let's say that you have $1,000 of short-term capital loss and you have $500 of long-term capital gain. And when that happens, the first thing you need to do is match your short-term capital losses with your short-term capital gains, and then your long-term capital losses with your long-term capital gains. Once you have subtracted your short-term capital gain with your short-term capital losses and you still have a negative, which means that you have a short-term capital loss, you can have that number work against your long-term capital gain and long-term capital losses. So in that example, if you have $1,000 short-term capital loss and a $500 long-term capital gain, after everything you will have the sum of $500 of capital loss, and you can match that number of $500 to your regular income. The good thing or the bad thing, depending on how you see it, is that you can carry your capital loss through multiple years. So let's say in 2015 you lost $50,000 for the year, and that $50,000 is capital losses. You can carry that $50,000 and match it against your capital gain. In addition, you can match up to 3,000 of the capital loss to your regular income. And you can match the 3,000 for the next year, the following year, and so on. And if in 2017 you had a 40,000 capital gain, you can have that 50,000 against that 40,000 gain, and you will still have 10,000 capital loss. That is just to give another example. Now, how does it work for options? And for options, it's the same situation. When you get a contract, you need to have that contract up to 1 year or more to be qualified as a long-term investment. And as a short-term capital gain or loss, it will be the same. If the option contract is less than 1 year, then it's going to be qualified as a short-term capital investment. Now, there's one more thing, and that is dividends. Dividends is a little bit simpler. However, it can become a little bit more confusing in some cases. Now, I'm going to give you that information about qualified dividends. Like you saw on the tax bracket, some people might pay up to 0% on dividends. And one of the things they need to know about qualified dividends is that you need to own those shares for more than 60 qualified holding days. Now, the 60-day holding period is defined as the 121 days that begins 60 days prior to the ex-dividend date. I made a video about dividends here where I talk about the declaration and the ex-dividend dates more in detail. Now you have to keep in mind that some dividends might not qualify. Now you will see on the screen the following criteria that the dividends might not qualify. And those dividends are made on capital gain distribution, dividends on bank deposits, dividends held by a corporation in an employee stock ownership plan. And the other option is dividends by a tax-exempt corporations. There might be other options besides those, but those four are the only ones that I know. Now you have to keep in mind, if that is not a qualified dividend, that amount is going to be taxed at whatever tax bracket you're in. And one of the reasons why I mentioned the qualified dividends is that I see a lot of people buying shares of stocks just to get the dividend. And you will see that some companies pay once in a while a special dividend. For example, Costco actually paid a special dividend, and a lot of people bought shares of Costco and then they sold the shares of Costco once they obtained the dividend. And when that happens, because you kept the stock for a short term, that is not going to be a qualified dividend. Usually the brokerage is going to give you a 1099, and in the section, I believe 1B, it's going to have the qualified dividends. So you will see on the screen the 1099 form, and in the 1B, you will see the qualified dividends. And I'm going to cover one important rule about options and stocks, and that is the watch sell rule. And what that rule is that you cannot claim a loss when you sell a stock, and then within 30 days, you buy the same stock. So let's say that I bought the Google shares on January 1st, 2017 at the price of $950. And when I sell the share, the price is around $900. So I will have a $50 capital loss. However, if I buy the Google share at the $900 price a week later, that $50 capital loss is going to be disallowed. And the IRS created that rule because a lot of people were abusing that hole in the tax system. So keep that important rule in your mind. When you sell a stock, you cannot claim a loss in that specific stock if you buy the same stock within the 30 days. And like I mentioned at the beginning, I'm going to give you some tips regarding the stock market and taxes. And the first thing is you can add your brokerage fees. For example, when you buy a stock, the brokerage might charge you either $9.99, $7.99, $4.99, $2.99 per transaction. So you can add those commission fees as a deduction because those fees help you to grow your money and make you money in the stock market. And the other thing is you can open a tax-deferred account, for example, a retirement account like an IRA or a simplified employment plan, which is also known as SEP. And the basic idea that you don't get taxed in those retirement accounts. However, you will be taxed once you withdraw those funds from your retirement account based on your tax bracket. The other thing that you can deduct, for example, if you bought a computer just to do some stock trading, you can deduct that amount in your taxes. And the other thing is if you have dividend money, you can have your brokerage reinvest that money into the same stock. And what do I do about my taxes? I usually file my taxes on my own. However, any capital gain that I do, I usually have that money withdrawn and put it into a savings account. So by the end of the year, I withdraw that money from my savings account into my checking account. And in the new year, I actually do my calculation to see how much money I have to pay the IRS. and I already have the money into my account. Now, taxes don't have to be complicated. You can get that guide that I mentioned before. The link is going to be in the video description. And that is going to be everything for the video. Please leave in the comment section below any tax question that you may have about this video. And remember, you can subscribe to the financial information channel. I'm going to continue bringing videos about the stock market, personal finance, and how to make money online. I want to thank you once again for watching the video. Have an excellent day and take care, my friends.